So as we have entered the new year 2023, let's look at the market valuation as of 31st December 2022. So if you have to evaluate the market at any level, there are two things that one should look at it. One is the earning per share of Nifty 50 companies, and two, the PE multiples, which means how many times it is trading basis the earnings. So let's look at the first one, earning per share of Nifty 50 companies. So we have been sharing this data with you for last 3-4 quarters, and we mentioned that Nifty 50 companies has recorded growth about 10% in 2020-21, and one of the highest growth that we have seen about 49% in 21-22. So what are we expecting this financial year? So we're expecting about 10% growth in this year and about 12% growth in next financial year. So let's see what has happened in this financial year. So first 2 quarter results are already out, and the third quarter is just over. The result of this quarter will be declared by this month end. The quarter 1, we have seen the 19% growth in the earning per share of Nifty 50 companies. The quarter 2, we actually seen the flat growth or no growth. And the main reason for this was the impact of Russia-Ukraine war. And because of this, what we've seen is the deterioration in the profits of oil and gas companies and metal companies. And because of this, we have seen the zero growth or no growth in the quarter 2. And because of this, we have revised our expectations of this financial year from 12% to 10%. And what are we expecting in next 2 quarters, quarter 3 and quarter 4? Combined put together, we expect about 12% growth. And as a result of this, the overall growth of this financial year expectation about 10%. So how these numbers are going to help us in deriving what is the reasonable level of Nifty at this point of time. So for this, we need to first find out whether there is a froth in the market. So what is froth? Froth is nothing but the actual level of Nifty minus the reasonable level of Nifty. And we all know what is the actual level of Nifty. Let's look at what is the reasonable level of Nifty. So to find out reasonable level of Nifty, a simple calculation, you have to just look at the earning per share of Nifty 50 companies. But mind you, we'll not look at the earnings of the past, we'll look at the earnings of the next 1 year. So EPS or earning per share of Nifty 50 companies for next 12 months multiply by PE multiples. Now here the PE multiples, if you look at the past data for last 15 years, Nifty has been trading about 19 times to the earnings of Nifty 50 companies of 1 year down the line. So if you look at the earning per share of Nifty 50 companies for next 12 months is about 946. And if you multiply that by 19, you'll get to know the reasonable level of Nifty about 17,974. And where are we today? As of 31st December 2022, at about 18,105, which clearly means there is no froth in the market. That is one. Now, if you're investing today, obviously you want to look at the market levels next 12 months or 15 months. So the way we calculated reasonable level of Nifty as of today, if you have to calculate the reasonable level of Nifty as of March 24, you have to simply look at the earning per share of Nifty 50 companies as of March 25. So with the calculation that we have seen and the data what we have seen in the earlier slides, the earning per share of Nifty 50 companies as of 24-25 is about 1067. And if you multiply that by 19, you'll get to know the reasonable level of Nifty about 20,280. So this clearly indicates that at 18,000 level as of December 22, you can clearly see a 12% growth in Nifty 50 companies. And if you have well-managed mutual fund portfolio, that should give you about 2 to 3% higher to Nifty numbers, which means you can clearly expect about 13 to 15% returns from your mutual fund portfolio. So what you should do as an investor? So first, relook at your asset allocation, get your portfolio evaluated, and fill in the gaps in your equity portfolio today by investing lump sum, or you can stagger your investment in next 1 month's time.